Hello, this is Andrew Hart from BigTrends.com, and welcome to another session of the Indicator Library. Today we're going to focus on DMI Difference. DMI Difference is another one of my favorite indicators, and as you know from hopefully already watching the DMI Directional Movement Index and ADX course, which I do recommend watching before this, you know that that's probably my favorite indicator out there, just based on its speed of its access to definitive, basically being definitive on whether you're bearish or bullish and whether it's tradable or not tradable. But we're going to take that indicator one step further from a big trends perspective. DMI difference is basically a micro invention on DMI, which is the Directional Movement Index, created by Price Headley, the founder of Big Trends. So let's go ahead and get started here and go ahead and start moving forward. All right. Well, as you guys know, Big Trends coaching and access to it is provided for educational and informational purposes only. The information presented here does not constitute a recommendation to buy or sell a particular investment. You are solely responsible for your investment decisions, and Big Trends and its staff are not responsible for any trades you choose to make. Not all Big Trends products or services are appropriate for all investors. Big Trends does not provide personalized financial, tax, or legal advice. Please consult your tax consultant prior to making any investments that may impact your tax situation. Okay, well, let's just get started here with the DMI Difference course with a quick refresher on what it's really built on. It really is derived from the Directional Movement Index, the Average Directional Index, so on and so forth. So just very briefly here, just to give you guys a quick refresher, let's just walk through this. The Directional Movement Index and the ADX, which is what we're looking at now, were created by Wells Wilder. Wells Wilder created these and basically wanted a way to quantify objectively what a trend is and whether it's how strong it is and whether or not it's strong enough to trade. So remember, specifically on ADX, what are we looking for? This is the component of the directional indexes or indices that tells you how strong whatever the prevailing trend is. So if the prevailing trend is bearish, ADX should be trending higher if it's a strong bearish trend. If it's trending lower and below these key levels that we have noted here, 20 and of course 25, then it's obviously a very weak bearish trend, i.e. not tradable. All right, the third and final thing to remember about ADX is what? When it goes above 40, it's indicative of a extremely strong trend. Don't be afraid of the word extremely. As you know, as options traders, that is exactly what we're seeking to trade, the extreme moves, right? These are the trades or the periods of time that are typically shorter, but also the strongest. Perfect for an options trader who's concerned about time decay and would like shorter term moves, obviously. So finally, you'll just see here that the ADX peak indicates changes in trends but not reversals. Right, so remember that, guys. As the ADX basically oscillates up and down, think about when you have a top in the ADX. Particularly, what does that signify? Not necessarily a reversal, but really it indicates an end in a trend and a possible change in a trend, but not a reversal necessarily. Which is why in the DMI and ADX course, as I mentioned, that I would recommend watching before this if you have not already, we do talk about using ADX as a filter for an exit, not a filter, but basically one of our tiers in a multi-legged exit strategy, right? Because so many of our exit strategies are directly related to reversals in price action. But the ADX itself can reverse without the price action necessarily reversing. So a potential way to get out there closer to the top or before it starts to roll back over. So definitely would recommend going back over that if you have any questions. Okay, so the DMIs, we've kind of covered this. Don't want to spend too much time on this, but need to do a quick refresher. Directional movement index. This is obviously the most important for learning about the DMI difference, which is what this class is focused on. Remember, it's developed by who? Wells Wilder. Once again, he developed all three of these, the DMI positive, DMI minus, and the ADX. Also created some of the other famous indicators that you may be aware of, the relative strength index, the average true range, another very good indicator that I recommend that you look into. But bottom line, what is DMI looking to do? DMI positive is looking to capture and measure bullish trends, whether the existence is there or not, whereas DMI negative or minus is looking to do what? Measure the strength of a bearish trend, whether it's there or not. What are the typical trading signals in DMI positive and DMI minus? The typical trading signals here are the crosses. When DMI positive crosses above DMI minus, what happens? You get a, quote, bullish signal. As you know from our previous class, specifically on this, we not only look for that cross, but we look for a cross in confirmation. We also look for the ADX to be supportive. Now, of course, overall, the DMI is doing what? It's distinguishing between trends and ranges. It's very important to notate. Now, specifically, I would really kind of put that last bullet point as an overall umbrella under the movement indices, the average directional index and the directional movement indicators, ADX, DMI, and DMI minus. All of these are basically telling you whether we're in a trend that is leaning bullish, a trend leaning bearish, or a range that is currently headed to the top of the range or currently headed to the bottom end of the range. So essentially, do recommend you going back and watching that over and over until you know that. As I've said, one of my foundational indicators that I've always used is DMI and DMI minus and ADX. As of today, and as of probably for about the last 24 months, I've been heavily using the DMI difference. Let's go ahead and just go ahead and get right into that and kind of explain to you. This is just, again, another refresher on the DMIs and the trading signals. We've already gone over this, but just for your refresher, note that buy signals, DMI positive crosses. The cross is important for understanding DMI difference. When the cross happens is when you get the bullish setup. If it closes above the setup day's high within 5 bars, you've got a bona fide what? Buy signal. No questions asked. Now, sell signal. Same thing. You're just looking for what? Sell signal, you're looking for DMI negative, or the negative directional index, to cross above the positive directional index. Correct? When that occurs, that day's low, because we want to see it confirm what we already believe. If we see the DMI minus cross above DMI positive, that's a bearish setup. So if we have that bearish setup, we want to confirm what our belief already is. We want to see it close below that low. So that day's low is our key level. If that happens within 5 bars, bona fide sell signal. Once again, looking for that ADX support. Okay, so now keeping that at the forefront of your mind on the warmest, hottest burner that you have, now let's take it one step further. DMI difference. Very, very simple, clean and crisp. All DMI difference is what? DMI difference is basically, or not basically, is the DMI positive minus the DMI minus. It's the difference between the two. So, it's a very simple calculation. You've